Good morning, everyone from Los Angeles, California. Welcome to Power Hour with Sergio. Every Friday, 10 a.m. Pacific, 1 p.m. Eastern. How's everyone doing? It's Friday. Is it thank God it's Friday or it's just Friday? I think it's just Friday. So today I'm sporting my Barca hat. Always been a Barca hat. Always been a Barca fan. Always will be a Barca fan. If there's any Real Madrid fans, step it up. Welcome to Power Hour. What's going on? Couple of indicators or economic indicators came out. PCE, inflation data, market pumped, then sold off. We're just kind of hanging in there now, kind of flattish. But more importantly, volatility was introduced back into the crypto markets. Crypto took a pump up to 91, then sold off down to 88. Yeah, volatility is there for sure. But as the title of today's live stream indicates, are we putting in a bottom on Bitcoin and Ethereum and Solana? You know, bottoms don't happen because everybody wants V bottoms on everything these days, right? Because that's what they're used to for the last 2-3 years. You know, we just sell off hard and then come right back and make new highs. I don't know. I think structurally there are things that are changing around the globe, especially. My X feed is full of gloom and doom about the carry trade about to be unwound and trillions of dollars of assets to be sold by the hedge funds and Japanese entities. I'm certainly paying attention to it. I'm not losing sleep over it yet, but I'm certainly paying attention to it. In fact, I talked to, we had a members live yesterday. For a couple of months, we're going to have members live. So if you do want to support the channel, click join. Send me an email, sergio@sergioavidian.com. I'll send you the Telegram chat group link. I mean, I talked to them about it. I explained it as well as I could. I mean, I do fully understand what's going on, obviously, with the JGB rates hitting all-time highs, especially on the long end. With unrealized losses piling up on Japanese bank balance sheets. Everybody's waiting for the shoe to drop. Everybody's waiting for the first domino to drop. When is it going to happen? When is it going to happen? Well, I have my thoughts about it. I can talk a little bit about it, obviously. It's definitely, I mean, look, you know, as we know, Japan was in a deflationary cycle for 15, 20 years, and they put the ZIRP on, zero interest rate policy, for I don't know how long. A very long time. In fact, the rates went negative. In fact, up until couple of years ago, rates were zero in Japan. So that obviously created this whole, for years, for a decade, the carry trade was going on, right? So banks and hedge funds and lever it up 5, 8, 10x and go borrow in Japan and then come invest in the US into the trillions of dollars, especially with the leverage that exists. And so now, where are we? Are we at the end of the game now? Because the Japanese interest rates, JGB rates, are shooting up. 10 years about to hit 2%, 20 years about 275, and 30 years about 3.5. So does it make sense for a hedge fund or a Japanese bank or any other entity actually to go borrow in Japan with those rates and then come and invest in the US? Well, we're trying to lower our rates, obviously, right? But good luck on that, because lowering the Fed funds rate is not showing any effect on the long end of the curve. Excuse me. And in fact, since the Fed started lowering rates last September on the Fed fund side, I'm sure 25 basis points coming up in December in a week. We'll find out next week. But so that'll be 150 basis points so far. And what has the 10-year, 20-year, 30-year done in the US? It hasn't gone down. Look, bond markets have their own mind. Bond markets have their own vigilantes. They're so large that I don't think either Japanese central bank or the Fed can do anything about the long end of the curve. Now they can do a lot of different things. They can shift the borrowing to the short end of the curve, not to pay interest on it, because when the Japanese rates are soaring like that, they literally are going parabolic, soaring on a daily basis, is that their unrealized losses in their books, because their books are full of long-term, especially Japanese life insurers and a lot of banks, their books are full of long paper. Well, when rates shoot up, what happens to the bond? The price goes down. So you have unrealized losses that you're carrying in your books into the billions. And now you can hold everything to maturity, but then that's a long period of time. And then you have outlays, right? Because especially with the life insurers, if you're holding zero coupon bonds in your books and you have to pay out when people die, the other thing that's happening in Japan, obviously, is the demographic shift, and their birth rates are declining. And yeah, I mean, there's a lot going on, except that I'm not losing sleep over it yet. But then everybody's talking about what if. The big what if is Japanese banks, life insurers, and around the globe, a lot of hedge funds have done the carry trade, right? So one of the reasons, by the way, the market's struggling up here is that the liquidity has stopped from the carry trade, because all that money was being invested in U.S. stocks and U.S. bonds. Well, the other thing is Japan is the largest holder of treasuries of the U.S., up to the tune of $1.2 trillion. Now, are they going to be, the questions are they going to be forced to sell those treasuries? And when they do that, is that going to, on a short-term basis, hike our long rates? Potentially it could, because that has to get absorbed. So when there's more sellers, obviously the rates will go up for a short period of time on the long end. And the more important thing is Japan holds billions, if not hundreds of billions of dollars worth of U.S. stocks, right? Because that's where the money was invested. I mean, if you did the carry trade last 3 years, obviously hedging for currency risk, which is costly, but still, and last 2-3 years, if you borrowed in Japan at zero and came to the US and put it in just an index, let's say, even if you didn't lever, right? We know what happened. The indexes last 2-3 years. This year, we're up like 14-15% on SPX. Last 2 years, averaging 25%. Well, that's massive, right? Imagine now if you levered it. But now, market's reason it's kind of slowing down here and not getting the Santa Claus rally is because there is no more liquidity created by the carry trade. Okay, that's one thing. A lot of people are talking about the unwind now, potential unwind, that Japan is going to be forced to sell treasuries and the assets that they're holding, and that's into the trillions, by the way. And it's not, again, just Japan, right? But all it takes is one domino to fall, and then we know how that story goes. I'm looking for the signs. It's not there yet, but then it will start. If it does start, I'll probably be on it, and I'll definitely be shorting either the futures or the, buying puts on index is really difficult these days, but, I'll figure it out and talk to my group about it. As we know, what do we say, right? Markets walk up the stairs and take the express elevator down, and we have had 2 occasions like that last year and this year. One was the initial Japanese carry trade part 1 last August, and then we had the tariff musical chairs in April, Liberation Day, right? So we know what can happen. We know what can happen when the selling comes in. Selling brings in selling. There's so much leverage in the system. Specifically on the margin side, right? We're up to 1.2 trillion in margin. That's an all-time high, and forced selling will happen, right? I mean, people who are leveraged will get liquidated, and that takes its own rhythm, obviously. But the signs will be there, and then nobody says you can't short the market, right? It's not against the law. Nobody says you cannot short stocks. Nobody says you cannot short futures to hedge yourself or actually make money, because things go down 3 times as fast as they go up. And so I'm ready for it. I'm I don't know, 60-70% or more, actually 72-73% cash in the account. I'm keeping my bullets dry. I have some positions on, small ones, albeit I mean, they will get hurt if we do get a sell-off, but then you can always sell things. You can always take losses. You got to take losses. You got to learn how to take losses in this game. If you're not, if you're hope and pray type of a person that says, again, there's trading and there's investing. As a trader, I don't mind taking losses. You got to take losses. You got to learn how to take losses. You cannot hope that the market V bottoms and comes and saves your butt every single time. That one time it doesn't do it, that's when you blow the account. So I'm watching for it. I mean, I'm not, I understand exactly what could happen. Will it happen? And then the other side of the coin of that is that, as we know, Federal Reserve ended QT officially. Now, does that mean they automatically go from QT to QE? Not necessarily. There are steps for that. There's first lower rates, and then if a panic sell happens, then they go to QE. But we'll see. We'll see what happens. But then who has the bigger bazooka than Japan on the planet? We do, right? So does that mean we'll start the printers immediately, or we'll wait until a crisis shows up? We're the buyer of last resort on the planet, right? We can print unlimited amount of dollars, and this time to save Japan, if Japan starts selling treasuries and equities, or the other hedge funds that are in the carry trade who start unwinding, somebody has got to be the buyer, right? Then QE may be necessary close sooner than later. But we're all set up. I mean, obviously there's going to be the Fed involved, and then with what's going on with the Fed, obviously with Hessen going in, he's obviously going to be listening to the White House, unlike Jay Powell. Well, Jay Powell is, not even there, let's say. All the Fed governors coming in, the new Fed chief coming in, basically with a hotline between the White House and between the Treasury or White House and the Fed. I think they're one. So Fed is losing its independence, I'm pretty sure. If you didn't believe they were independent to start with, that's a different story. But to a point, they were kind of independent. Once Fed is run by the White House and the Treasury, right, anything is possible. And I have my thoughts about this, that maybe the next couple of months we will get a whoosh and we will get a sell-off, and maybe some dominoes will fall and some people will get liquidated who are leveraged too much, especially with the carry trade unwinding. If that happens, we did have the same thing last August. But it was really short-lived, but it was sharp. It was 20%, 15, 18, 20% on the indexes. And it was short. It was a couple of weeks, and we came right back up. So this one may be a little bit different, because if you look at the JGB rates going back to last August to now, they are 100 basis points higher on all levels on 10, 20, or 30-year JGBs, right? So there is a lot going on. And if we have to print, how much do we have to print now to save the system? I mean, if history is a guide, during 08 GFC, we printed 800 billion called TARP. And during the pandemic, we printed 7 trillion, pumped it in. And what do we have to do this time? 20 trillion, 15 trillion? I mean, we have to. I have a strong belief. The strong belief that I have is that we are at a point of no return. We cannot, and Elon figured this out, after 3 months working with the White House about Doge, right? He goes, this is unfixable. The unfixable part is we cannot have fiscal discipline and reduce the deficit and the debt, national debt. We're never going to do it. It doesn't matter who's in the White House. We're just going to keep pumping. And our national debt is going to hit 39 trillion in about another 40 days. A trillion every 100 days. This is all the macro stuff. You can't obviously day trade or swing trade with this stuff, but you have to keep all this in mind. And that's where we are. So what is it going to take next time? What is, black swan, gray swan, whatever you want to call it? What is it going to take next time? How much money? How much printing? And then that money goes into money supply. All asset classes take off. Who benefits? Obviously, top 10% owning, 87% of the assets in this country, because they already hold all the hard assets. And that's my goal, that, financial literacy and invest. You have to invest. So, I said that to my members group yesterday. I think we're just musical chairs. There are 9 people in the room, and there's one chair, and that one chair is the Treasury and the Fed. they got to do whatever they got to do, because those 9 people, and we know who they are, there's no exit. There's one chair. We can't stop the music now. We really cannot afford to stop the music now. We just can't. And so fiscal austerity, all that stuff is gone. We're just going to have debts and deficits going as far as the eye can see. And then how do we lower the debt to GDP ratio? By increasing GDP. How do we do that? We deregulate. We pump, right? And what happens? Inflation obviously is never going to go back in the genie, in the box that it came out of. All this is inflationary, but then which one? We're just trying to figure out which is worse, right? Let inflation run hot or kill the economy. Well, we can't do any of that. We're 80% GDP is consumer spending. We already know consumer is stretched as far as I can see. So we need to pump. I mean, we need to print and spend. That's it. That's what we're good at. And we're going to grow ourselves out of this debt to GDP hole. I mean, Japanese debt to GDP is 230%. Ours is about 135%. And so there's debt to GDP, right? So that's 38 trillion. GDP is close to 30 trillion. And that's pretty clear numbers there, 130%-ish. And how do we lower that number? Well, we can lower that number by reducing the debt, and that's definitely not going to happen. Music is not going to stop. Or we can increase GDP. How do we do that? We just more money. And I was looking on X today. Close to 1.2 million folks have been fired or laid off this year so far. Starting with the top of 300,000+ people by the federal government, and going all the way down to the UPSs, Amazons, and all these big companies Verizon's laying off 30, 40, 50,000 people at a crack. And look, that's going to have an effect. That's obviously not a great thing for these people right before Christmas, but it is what it is, and that's how it works. And yeah, so we can't stop the music. I believe we're going to pump. Maybe we'll have a rough couple of months of the starting year, but midterm elections are coming up. Trump cannot afford to lose that at all. As things stands, most likely he may. And if he does that, then we're dead. I mean, not we're dead, but he's dead. He's not going to be able to pass anything, because at the moment he has the House, the Senate, and the executive branch. So we got to do. They're going to do whatever they can do to pump. And so is QE bells? Am I hearing QE bells? It sounds like it, especially if the dominoes from the Japan crisis, they are in a crisis. I mean, there is no doubt they're in a crisis, massive crisis. And they laid the groundwork for this by having zero interest rates for 20 years. And now inflation is running super hot, and the bonds are telling the story, right? The reason bond rates are shooting up in Japan is because their inflation is running super hot. So again, the long bond doesn't care what the government's doing. The other thing that I've experienced, I'm seeing now the first time in my 30+ year career, trying to understand this and do this as well as I can, is on one hand, Japan has a $130 billion stimulus package. On the other hand, they're about to raise rates. How does that work? That's like stepping on the gas and the brake at the same time. I don't know, man. I'm glad I'm alive. I'm glad I'm experiencing all this stuff and learning still, even after all these years. And with the stimulus package going in Japan, I understand why. I mean, look, their demographics are so horrible at the moment that, maybe they're going to open the borders and start immigration policies. I don't know. They need people in Japan. They need people to work and pay taxes, and they have a massive retiring group of folks who are not going to contribute to, taxable revenue. Well, who's going to do it? The younger folks are doing it. Well, but when inflation is running hot, obviously they're experiencing what the middle class in the U.S. is experiencing. Same thing around the globe, basically. How's the middle class in the U.S. doing? Not well, because they're buying groceries on buy now, pay later plans. So I'm going like, something's got to give. And so now Japan says, okay, yeah, we're going to pump in 130 billion. We got stimulus package. On the other hand, the interest rates are shooting up, and all the unrealized losses due to the interest rates shooting up and bond values going down, that all these life insurance companies and the government itself, government's the buyer in Japan, government's the buyer of stocks. Look at the Nikkei making all-time highs. They're the ones that they own the stuff, right? So it's pretty simple to understand. You print the money and you buy your own stuff. It's like you're a drug dealer. You get high on your own stuff. That's what we do in this country too. We print the money, we go buy the bonds, we go buy MBSs. And I'm going like, that's an interesting thing, right? So the only way to get out of this hole is inflate and hopefully increase GDP, and then because debt or deficits are not going to come down. That's a fact. And so we'll see when the first domino drops, if it drops. If it drops, I'll be around, obviously. I'll alert my group, and then we'll have to do stuff. I mean, we'll have to trim positions, and then I will personally go short, but we'll see. We'll see how it's going to work out. Good morning, everyone. Good morning. Good morning, Traveler, Luis. So let me put the link up if anybody wants to show up, because it's going to be kind of short today, about an hour, hopefully. But I want to also talk a little bit about my pivot, who I talked to my group about during our members live yesterday. And there's the link if anybody wants to show up. Good morning, Doug. Yeah, that's a good one. We were about to buy Greenland. What happened to that one? And then Canada was going to be our 51st state. What happened to that one? I don't know. I don't think they're friendly. From Japan? I don't know, man. Well, we may have to go save the Japanese central bank, Jay Claver's domino theory. Hey, Mojo. Reverse carry trade unwind, big catalyst with XRP handling backhand liquidity. Okay, you're still holding on to XRP, huh? I don't know. Good morning. Noor Chicago. Good morning, Sergio. Can you please look at TAPR Capricorn? Yeah, big move yesterday. Yeah, they didn't get approval, but I used to be in that stock when it was like in the teens and then shot up to 20s and then died down to the 6s and 7s. I saw that they have a drug for Duchenne muscular dystrophy, and supposedly at the double-blind studies, the drug did wonders, especially for the cardiac side of that dreaded disease, which affects about 15,000 people in the U.S., and specifically about 13 to 15-year-old boys. So I'm very aware of what happened there. Stock spiked up 350, and I bought some puts at 25 strike, good for 2 weeks. I wouldn't be gambling like that. Those, because you buy puts on these things, implied volatility probably exploded, or it was pretty high. Even after the news, implied volatility is probably very high, and then time decay is going to chew up on that, especially if you bought 2-week outputs. I would be really, really careful with that. I wouldn't be messing with that stuff. Now, is the stock worth 25? I don't know, but yeah, buying puts on these things is very, very difficult to make any money on. Any thoughts on sulfide dilution? Well, they did it once, about 20. Look where the stock is, right? I mean, look, if you're really super short term, I don't know, but obviously stock is down today. They're raising money. I would, if I was the company. Why wouldn't I? There's a potential S&P 500 inclusion there. I don't know if it's today or not, but yeah, I mean, look, it's down 10%, or is it something like that, 8%? I think it's fine. I mean, the company's hitting on 7 out of 8 cylinders. Earnings were good. They're just raising funds, and I'm sure they have a good place to spend it. Again, last time they did it, it was right about 21, right? About 6 months ago, 5-6 months ago. I remember that. And everybody was complaining then. Then stock was to 34. Okay, down to 28. Yip-de-doo. What's the big deal? I mean, I don't think it's a big deal. I think nobody will remember this in like a week or a couple of weeks. And about crypto, people saying different things. Yeah, FinTwit, I don't pay any attention whatsoever. It's just a bunch of jokers over there. Nobody knows what's going to happen, man. Although my idea is that, I think that we're in a basing period here, and BTC and ETH and Solana, bases don't happen overnight, right? Because everybody has no memory of how things work. I mean, everybody wants a V bottom and then new highs. I mean, it doesn't work like that. Just because it did for a couple of years, it doesn't work like that. So I think they're in the process of putting a bottom. It may take another, week, month, whatever. If we make lower lows here, we're going lower. Obviously, we're going down to 70K on BTC and probably 2,300 or so on ETH. Look, I mean, it's in a downtrend. This last little push was back into resistance. If you do like chopsticks and charts and stuff like that, right? Now, the other thing is Ethereum had a network update, which I really, really liked. So they expanded the bandwidth. If you understand any of that stuff, I kind of understand it, but I'm not, professional at it yet. But I'm enjoying reading and learning new things myself. I don't pay attention to anybody. When it comes to trading or investing, I don't pay attention to my wife. If I had a mother, I wouldn't listen to my mother either, let alone some joker on FinTwit who has 100,000 subscriber following. I couldn't care less. For me, I make my own thesis, I structure my own trade, and then I live with the consequences, good, bad, sideways. But when you're structuring a thesis, don't include the FinTwit folks' opinions in it, because we all have opinions. But none of us know what's going to happen the next minute, let alone the next month, let alone next year. That includes Tom Lee. So much respect to all these people, right? We all have opinions. That's what makes a market, man. Some people are bearish, some people are bullish, some people are buyers, some people are sellers. But I don't pay any attention to any of that stuff. My opinion, again, if the dominoes drop, yes, we will have deleveraging going on in all asset classes, indexes, including Mag 10 and crypto and everything, and then it'll wash itself out. And then the US will show up with their big bazooka and turn on the faucets, or get in the helicopter, start pumping money, or right? Printers will start double time, and we'll pump and we'll save. I think they're both, I dollar cost average only Bitcoin every Monday. I've been doing it all year. Initial purchase was in 2020. Didn't touch after that. No, DCA every Monday, same amount, same dollar amount, regardless of where BTC is at. So I'm going to hodl. Is that the word? Yeah, hodl. I just accumulate. I don't trade. I trade the other things, like I trade BMNR, BMNU, MSTR, MSTU, all the other proxies for Bitcoin. But I only buy Bitcoin and I hold. None of the stuff is, that was then. Now it's like, people are saying the 4-year cycle is over. So I'm saying, yeah. If the 4-year cycle existed, which a lot of people believe it did, things are different now. Crypto was not institutionalized. Now we're institutionalized. We didn't have ETFs then. We didn't have any other stuff. Okay. So, 4-year cycle also depended on the business cycle. And I think this business cycle, according to people who believe the 4-year cycle is over, is because the business cycle is extended now. So there's no 4-year cycle for me. The price takes precedence for me. What I see in front of me is the price. You can have opinions that it should be this, it should be that. No, price is what it takes. It's in a downtrend, clear downtrend. It's making lower lows, lower highs. That's all I see. Trend is your friend, man. I mean, and then you can say, well, why are you hodling if you think it's going lower? I'm like, no, I've been hodling when it goes going higher. I've been hodling when it goes going lower. I just want to buy and pass it to my kids, take it out and put it in cold storage and give him the storage device. It goes, here, this is your money. But I believe it's going to be higher long term. I don't know. I can't put a target on it. I mean, a lot of people go, I don't know, 1,000,000, 200,000, whatever. Look, it'll get there at some point because the musical chairs is not going to stop. We're going to keep pumping. We're going to keep spending. Deficits are going to go higher. Advantage, finite asset. I like them both. In fact, I have a video coming out at noon today about which one I like more, Bitcoin or Ethereum. It's like asking me which one of my kids I like more. Ethereum has really a lot going for itself. Bitcoin is a holder of value. I like, obviously, finite amount. I like, but Ethereum, I think, if what Tom Lee says is correct, that all of Wall Street is going to be operating on the Ethereum network, you can pick your number. I don't know. If these are big ifs, if tokenization of stocks or assets classes are going to come around and it's all going to be on the Ethereum network, there's a lot going on, right? There's a lot for me to learn, and I'm glad there is, because learning never stops. And I don't know, that's for the cycle. I'm not buying any of that. Oh, there's my buddy with the BMNU. BTC BMNR can recover. Yeah, there was a little bit of decoupling going on. I mean, a lot of people are putting charts of the triple Q versus the, I saw a couple of those, like that. So they're saying, well, this is wrong. BTC especially follows triple Qs, right? And triple Qs are run by 8 stocks. So the gap is too wide. Like, let's say Bitcoin is down here and triple Q is here. So which one is going to happen? Are they going to meet in the middle? If Bitcoin is going to catch up to triple Q, if triple Q is going to sell off to Bitcoin, which is the dog, which is the tail? I'm like, I'm not paying any attention. I just watch everything individually. Triple Q is 2% from all-time highs. SPX is 1% from all-time highs. Bitcoin is down 40% or 35% from ATH. That's it. That's what I see is what I see. I mean, I'm not going to guess any of that stuff because, look, you can make up stuff all you want. For me, price takes precedence, and then volume next. Those lead, and those are the things I watch. I have an opinion. Do I want Bitcoin and Ethereum to be at 200,000 and 10,000? Absolutely. Then I know what to do. Then it'll be in an uptrend. Then I'll just trade accordingly or invest accordingly. Because at the moment, we're selling off. That's it. I don't know where it's going to stop. When it stops, we will all know. We will create a base and then start rolling up, and then we'll have an uptrend. And when we have an uptrend, we all know what to do. When we have a downtrend, most people don't know what to do. And we're in a downtrend. Hey, Alex, how's it going? Happy Friday, sir. Happy Friday. About SoFi today, possible S&P 500 inclusion, possible rate cuts, capital raise. Well, we're going to talk about my pivot that I talked on during the members live yesterday. Potentially. But I mean, I don't think this capital raise is that big of a deal. I mean, look, a lot of people have positions. A lot of people have SoFi has gone to 50. Oh, they killed the stock. I'm like, no, man, they did one at 21. You killed the stock for 10 days, and they floated the shares, and they already floated the shares at 27.5. It'll settle about a week or so, and then it'll do what it's going to do. Look, stock is in an uptrend. Stock fundamentally is doing well. Technically is doing well. It's one of probably, it'll hit my 52-week high list shortly. What's the problem here? But some people probably bought like a weekly $30 calls yesterday, and stock was 30.5. They're counting their money that by Friday or next Friday it could be 35, and then they killed the stock. All the premiums died. Well, if you're doing that kind of stuff, there's no help for you, man. You're gambling and you're trying to figure out what the heck is going on. I think long term is going to be fine. Intermediate and short term and long term. I mean, what's the big deal? Stock is down 8%. So I mean, shit happens. So yeah, I mean, I'm not in SoFi, but if I were to be in, I'll probably sell puts today. Maybe sell some 25 puts to own the stock, or 27.5 puts. That's what I would do. Why? What's the big deal? So anyway, let's talk a little bit about the pivot, and then I'll go through some charts and explain that. So this year has been a difficult year. My account's up handsomely. It's up about 2.5 times of SPX. It was up about 5x of SPX, and I was in probably the same group of stuff. That's digital asset treasury companies like SPET, DFDV, and ASST, and we know what's going on. It was just drawdown. I mean, it's unrealized stuff at the moment, but then if I were to close everything and take the tax losses, I'll be up. As of yesterday, I was up 41%. Today, I'm up less because we're selling off on crypto. But going forward, whatever I'm going to do is, I used to do this before, stocks became really wild and nice and steady, right? So I believe in something. Okay, I don't believe in buying low, selling high. I believe in buying high, selling higher. But then you get mesmerized by these moves these stocks are doing, such as all the AI names and Oklos and AI power generators, and there's plenty of those. Like HIMS is wild, moving 20-30% every week, right, or a month. Well, that's fun and games, and that's all good, but you're going to get nailed if you're wrong. And then even technical analysis is not helping in some of those, because you would think the 50-day is going to hold. That doesn't hold, and rolls over, goes through hot knife through butter, and then it rallies back up. Whatever you do, you're going to be wrong. So what I'm going to do, starting New Year's, obviously, go revert back to nice and slow and steady. So there's, even in the worst bear markets, there are groups of stocks. So there's something called rotation that happens, right? So when money comes out of a group, it goes into another group. It's good to have some sort of a 52-week high list, meaning stocks that are making 52-week highs. And that shows that they are trending higher. So if you're in an uptrend, most people cannot or don't like shorting things. And you can also have a 52-week low list that are making lower lows while the market's at an all-time high. And then I will put up those two watch lists or lists shortly for you guys to understand. But even in the worst markets, there are stocks that are making new highs. Okay, so the way to do that is pretty simple. If you have a Robinhood account or Thinkorswim or Tasty, I'm sure you have a way of creating a watch list for yourself with a 52-week high list with some filters, obviously. So my filters are 4. It's over $2 a share, at least 500,000 shares a day for liquidity. It's got to be making 52-week highs, meaning the stock is making not an all-time high, a 52-week high, because there are some stocks that are coming off bases. So for the year, the stock is making new high, although market's selling off. Even on the worst days or worst sell-offs, you have stocks start making new highs. Now, one advantage of that is you're going to understand rotation, because when I look at my list for the whole last week to add it to my watch list, the live list, right? You can do it on, again, Robinhood, and I'll show you guys what I've done. Is there are stocks that are making new highs whilst the rest of the market is eating it. Okay, so that's rotation is happening. So you're going to catch rotation. So my list, and it's not by groups, but you can see the rotation, because out of, let's say, 80 stocks that are making 52-week high list today, which I think there were 80, and I think there were 95 yesterday, is almost a quarter of them are financial stocks, banks especially, right? Small, big size, large, whatever. Another maybe 20% is biotech stocks. Another 15-20% is healthcare stocks, right? But then you're going to say, well, look at United Healthcare. Yeah, but even, see, that actually proves my point that if you were, let's say, in Target, you're dead. But if you're in Walmart or in TJ Maxx or in Ross stores, you're doing great, because it's making 52-week highs. Even within the same group, it will stop you from buying the dog, and it'll not force you, but it'll kind of give you the indication that, yeah, these are the ones we need to get in. So to me, that's nice and easy. Let's just find the gems, and technology will make it happen for you. Obviously, if you created a watch list, watch it, because all I see on the internet is the same damn 10 stocks. Obviously, Mag 10, let's put those away. And then you have all the same stocks. All of everybody's after the same shit. You have Mag 10, you have IREN, you have NBIS, you have OKLO, you get HIMS, you get. Why do I have to just try to catch a falling knife with those? Because when they do go down, boy, do they go down, right? I'll just go nice and steady my way and, attach myself. Again, I'm not just going to look into that. I'll still keep looking at that, but then what it will do is it'll give me time to have patience with these high flyers and wild stocks that are moving like pork bellies. So to me, have some sort of a hybrid system now, as opposed to just be in the exciting group. Just because the premiums are higher, a lot of premium sellers gravitate toward that, but then the risks are higher. There's a reason the premiums are higher, okay? So my thing is, still pay attention to crypto, still pay attention to the proxies, but expand my horizon a little bit, then introduce a lot more of these stocks, specifically just to figure out where the rotation is. When money comes out, it goes into groups, and then these groups are benefiting by having uptrends. If I'm going to buy something, I rather make sure it's in an uptrend than wait for a pullback, buy it into something. And even in these uptrends, the pullbacks are more buyable than me trying to figure out that something is already down 40%. Is it going to stop here? Should I step up here or not, or all that stuff, right? Again, this is all trading. We're not talking investing. Like, again, I said this before, I have 4 stocks I'm looking to add a 5th. I have 4 stocks in my long-term port. It's Google, Lululemon, UPS. I just got in 8 days ago. So Google, Lululemon, Kava, which I'm down about 5-6%. Google, I'm up 170% from April. Lulu, I think I'm up now. I'm up solidly on that. I was long Nike, switched it to Lulu, and then I just bought UPS. So even like, for example, in that, if you look at FedEx versus UPS, FedEx is almost making 52-week high. UPS is on its hands. It's been going down for the last 3.5 years. Now they started laying people off, 30, 40,000 people. All these turnarounds start like that. Last earnings report was okay. And then I go, okay, it's time to get in, because that thing has been in a bear market of its own for the last 3 years while the market's up 70%. So my thing is, long-term port, I treat it differently. But if I'm going to trade, I rather trade with stocks that are uptrending if I'm going to be buyer, and shorting that are on a downtrend. That's what I'm trying to do. What are my prospects? Good question. I'm looking at 2 stocks. I don't like buying things when they're dead, but then I wait for some sort of a catalyst for them to start turning. I almost bought Meta for the 5th stock, and then I go, no, man, I'm not going to do it. I'm already in in Google. Google, I got super lucky in April, and I did not buy Google because Gemini was going to be the leader in AI. I bought Google because Waymo was not being considered within the company. I think Waymo is I'm pretty sure Waymo is going to be a huge part, up to $1 trillion business for Google. And that's why I bought it, because I'm very familiar with that space. And there's 2 stocks that I'm looking at the moment. I'll tell you guys what they are, but don't go do anything. Again, none of this is trading, financial, or investment advice. What I do is risky. Don't follow me. The first one is a company called Fastly, FSLI. FSLY is the symbol. It's a small, mid cap, I would say. It's about $1 billion, $2 billion company. And it's just coming off a base now. Earnings report was amazing last quarter. So if that's the catalyst, then I want to get on, because I did that with Carvana, sold it 5x, and then it went up another 6x, like that. Outside that one, so I tried to keep it as a diversified group on the investment side. So I have obviously Google, IT or high tech, let's say, Kava, pretty much, it's a restaurant company, as you guys know. It depends on the millennials stop, eating out and eating more healthy than, let's say, Taco Bell or burritos or whatever. And the last one that I'm looking to buy is I believe that the interest rates are going to be forced to go lower. Okay. And then I think the refinancing boom is going to happen again. and mortgages are going to go lower, and home affordability is going to fall in line a little bit, and that one is Rocket Mortgage. So then it'll be a completely diversified kind of a port, right? We have UPS, we have Kava, we have Lululemon being a Canadian company. Maybe we'll make peace, with the tariffs will go down or something with Canada. And that stock has been beat down horribly bad. Yeah, those are the two. We'll see which one I decide. Maybe I'll just put 10% in each as opposed to 20%, because I have about 22-23% room left. So completely diversification. Those are the ones I'm looking at. And they don't, what I picked there, by the way, it doesn't have to be a Mag 7 or mega cap, right? And small cap, mid cap, that's where the money's at. And the goal is to hold them 1 year, 1 day. Unfortunately, I couldn't do that with Unity software. And if you guys watch me enough, I bought that at 21.5. It got up to 43. I took the double. It's still around there. I still like the company, actually. But then when they give you a double in like 4 months, you just got to go Google. I'm not going to do it. I'm not going to take the double. I'm going to go 1 year, 1 day. I think I just sold options this week, actually. I sold the May 2026 $350 calls for $26, and which takes me to 1 year, 1 day. I don't want to pay short-term capital gains taxes because I do enough of that with the trading account. And so let me go to show you guys what I'm thinking about. It's not a total pivot. It's like expanding my horizons a little bit, because I don't want to just keep talking about the same stocks over and over, because the whole world is talking about them. It's all about AI. It's all about NVIDIA. It's all about Palantir. It's all about, like, I'm tired of it. What I want to do now is revert back to what gives you more success and gives you less stress. Because in an uptrend, right, if you have a stock that's at 10 and it's going, I don't have to buy the bottom. I don't have to sell the top. What I have to do is catch the middle. If the stock is going to go from 10 to 30, if I get in at 15, get out at 25, that's fine for me. So, but that's what I want to do. If I'm going to buy something, I'm going to make sure it's kind of in an uptrend. So those are the two stocks. Let's go to the charts real quick. I put the link up. If anybody wants to join, grab the link. It could be one of the people who don't like me on X. I don't want to go talk shit to these people. I don't have the time, honestly. But then the stuff they put on X is so ridiculous, right? They have just graduated from Option School 101. And then they come talk like, yeah, sell puts, sell calls, everything's going to be fine. I'm like, yeah, there's a space and time for all that stuff. But there's risks. You got to understand risk. Risk. Manage risk. How much risk is there? What's your exit when you enter? Can't do hope and pray, man. Can't do hope and pray. I mean, hope and pray may have worked, but rarely it does. So anyway, let's go into the charts a little bit. All right, you guys can see this, I'm pretty sure. ETH is selling off and BTC is selling off today. So I'm going to go through the 52-week high list, but first of all, all right. So we'll go through the positions real quick. There's no new positions really. The same positions as I had Wednesday. I'll post them I'll post them on the community page of the YouTube channel. Community page, yeah. It's easy to find. I post them every Monday, Wednesday, Friday. So what do we have? Okay, so ASST is kind of dying now. I have 700 leaps on that, but it's my lotto ticket for 2026, 2027. We'll see how it works out. BMNU, long 3,500 shares at 778 and short 8 calls, 9 calls, 10 calls, 11 calls, 12 calls, part of Naked Strangles with the 5 and 6 puts. They expired December 19th. You guys can go check out the position and make sense of it yourself. I like it. It's just hanging in there. If they all expire worthless, great. If I get assigned more, if the stock is below 6 and 5, I'll take the shares. If the stock is above 8, 9, 10, I get called away, I'll take that as well. So I have it tied up like a pretzel. So that's it. That's where that is. 5,000 shares of Blaze AI, 243 call stocks, 247. Holding, sold some December 3 calls against it. This position is new. A couple days ago, I bought 150 January 5 calls on NEO, but also sold today's expiration 5.5 calls against it. So lower my cost basis a little bit. And my cost is, I think, is going to be about 38 cents after today. And they're about 45 cents. So I got about, I don't know, grand profit there. SBET, I'm long. This is that killed me. Part of my drawdown. Luckily, I was in defined risk trades like put credit spreads, and I got out before max loss. So still took a loss, took the L, and now big L on this one is I'm long 210 of the January 15 calls. I still have hope on that, obviously, if we get a pump on ETH. But I've been selling 15 calls, weekly 15 calls as weeklies against it. So I've been lowering my cost basis, but still have a nice size unrealized loss on it. So that's where we are. ASST, obviously, there's a pumper called Mike Alfred on that. Like, maybe you guys heard of him. I don't know who the gentleman is. I'm sure he's a smart guy. He's been saying buy ASST, not understanding maybe what the heck is going on there. I bought that before he even talked about it, and he had the stock pumped to like 170, and then now we're down to 90 cents. And every day he posts like, you guys don't know what you're missing, this and that. I'm like, nobody fucking knows, bro. Anyway, so I'm long 700 leaps, 2.5s and 5s on that going out to January 2027. So if Bitcoin does pump, I'm pretty sure this will do well. But, we'll see. What else? Not much else. So let's go to the charts and let's go to before I go to my charts, let me go to the 52-week high. This is the 52-week high list. Okay, look how many stocks there are, folks. I set it up alphabetically, by the way. I set it up the way I like it. So it starts with last net change, bid ask, 20 EMA, 50 EMA, 200 EMA, RSI, volume, and money flow. So all I'm doing is it's alphabetical. It goes A through Z, right? Look how many 52-week highs there are today, okay? Market struggling, this and that. And then we'll go through some of that list. And then you guys look at the difference in charts, okay? Difference in what I'm looking at and how you can find new ideas. Look, man, there's 10,000 stocks out there. And everybody's trading the same fucking 10 stocks, 20 stocks. The Palantirs, the NVIDIAs, the Mag 10, SoFi, and whatever. I'm like, no, there's 10,000 stocks, right? And you set your filters. I don't want you to guys go buy pump and dumps and 50-cent stocks and this and that. So you set your filters, and there are some major names in there. And from the list that I'm looking at, it's been the same stocks over and over and over. So okay, cool. So what do? All right, we built a list. You create a watch list, and then you go at it. So this is that, and then, to be honest with you guys, let's see how many. Market's at 1% from all-time high, right? Let's take a look at how many stocks are making 52-week lows. How about that? New yearly lows. Look at how many there are. Look at this. Look at this. There's at least 40, 50 stocks that are making new lows while the market's making new all-time highs. And there are some big names in there as well. So if you like shorting things, short these things. Don't go pick tops and short. And if you like things that are going to make 52-week highs are going to be more, but this list will explode if the market sells off. This will have 150 names on it, and then the other list will go down to 20, 30 names. But there'll still be stocks that you can buy, even on the worst market conditions, that are going to go up because money rotates. Money does not sleep, okay? So let's go back to the 52-week high list. And here we are. Look how many stocks there are. What is? Why do I have to go deal with the same goddamn 5 stocks? Because it's talked on X somehow. Whatever. So let's go to big charts and let's look at some of these stocks, right? This is the SPX, by the way. I mean, literally, we're at an ATH. We maybe have 1%. Triple Q, same thing, a little bit less, but you know, I mean, nothing wrong with these charts. We had a little bit of a whoosh. Everybody's talking about the carry trade situation. I'm like, I don't know. It's not here yet. When it's here, I'll deal with it. Triple Q. TLT is the inverse. Let's see. Okay, so this is September right here, folks. Right here, right here. September of 2024. This is July. Last September. Let's go 3 years. This is the inverse 20-year bond indicator, TLT it's called. So if TLT is going up, that means interest rates are going down. And if TLT is going down, that means interest rates are going up, okay? So May, June, July, August, September. So here's last September. This is when TLT was 100, okay? This is when the Fed initially cut the rates. So then what happened is that TLT went down to 85 from 100, meaning interest rates actually are going higher while the Fed is trying to lower rates, because this is the long end of the curve where the Fed cannot do shit. So please understand that just because Fed is going to cut the rates doesn't mean mortgage rates are going to go down, doesn't mean car loans are going to go down, doesn't mean your credit card rates are going to go down. So understand it. And actually TLT has been going down, meaning interest rates have been going up in the US, and also obviously keeping pace with the inflation. I mean, keeping pace with the Japanese debacle that's going on. But you know, we can go through some of the usual suspects, but then I want to make you guys understand that what's in this 52-week high list. So as of at this moment, there is, how many are there? Let's see. How many? 78 names today. Okay, starts with Acadia Pharmaceuticals. You don't like biotech? You don't have to. This is the type of charts I want to deal with. Analog devices. There you go. I mean, I don't want to deal with downtrends. I don't want to guess if it's going to hold and here and there. These are all uptrends. They're all going to be uptrends. So trade within the uptrend. ALMS, Alumis. I don't even know what the company is, but it looks pretty good to me. There you are. So Applied Materials, they're big companies, mid cap, small cap. There's an uptrend for you. Amcor Technologies, AMKR. I'm not going to go through 78, but this is what I want to deal with. I don't want to deal with this. This is HIMS. I don't want to guess that, okay, HIMS went from 65 to 33. It's going to hold here. I don't want to deal with SoFi that, oh, they did this, they did that. Stock is going sideways. Okay, fine. I want to make money. Well, yeah, you can sell puts, you can sell calls or whatever, but there's a lot of oil stocks in here. While crude is on its ass, all these stocks, you know, are making highs. This is Apache. There's Bank of America. There's tons of bank stocks in here, right? What is that? Anticipation of rates going lower, bank margins going higher. Okay, well, there you go. There's B of A. Goldman is in here. Barclays is in here. Just trade these things, man. Why do I have to go deal with NVIDIA? Oh, NVIDIA is the only company on the planet. No, there's 10,000 stocks out there. There's NVIDIA. Okay, it topped. It's going sideways. There's Palantir. Okay, still, Palantir is the same price as it was 3 months ago. Okay. I mean, is there ways you can make money with this? Of course, you can sell naked strangles and you can sell puts, calls. You can do whatever you want. But you know, that's not my cup of tea at the moment. The Citigroup is in here. Caterpillar is in here. If the economy is going to die or slow down, why is Caterpillar making a 52-week high today? Okay, I mean, that's construction. That's like, right? You know, Canadian Natural Resources, CNX. Okay, so the one that shocked me actually is two stocks. If the American consumer, especially the low-end consumer, is not doing well, because we know the high-end consumer is doing great. They're actually 70% of the buying. They're doing 75% of the buying. But why is Dollar? I mean, I wouldn't have guessed that. If you asked me where is Dollar General, I wouldn't have guessed it'll be in the 52-week high list. There's Dollar General. Why is that stock taken off? especially the last couple of weeks. And then so the 52-week high is that you would have entered that stock yesterday. In fact, it just made a 52-week high. My point again, why is Dollar General in there if the consumer is not doing well? Low-end consumer, Dollar Tree, again, right? Why is that doing what it's doing, right? So it gives you actually this the rotation that's happening in the markets. Money is going into these stocks. Obviously, that's what they're doing. So to me, it's a good thing to look at as opposed to Five Below, another mid-tier retailer. Why is that making a 52-week high? There you go. And it's not just making a 52-week high today. It's been making 52-week highs consistently. Even General Motors is in there, right? There you go. I wouldn't have guessed that. Oh, there you go. Everybody is like, oh, Tesla, Tesla, Tesla. I'm like, why am I just stuck in Tesla? Yes, keep an eye on it, but then I'd rather be in this. Goldman Sachs is in there, obviously. New 52-week high today. Morgan Stanley, 52-week high today. I mean, look, just ideas, right? You don't have to be in the usual suspects to make money in this market. Expand your horizons, please, and enjoy the ride. Because look, these will be rotated out of, and then you will know, and then new names will appear on your list. So keep updating your list, maybe once every couple of days, and move on. A lot of gold stocks are in here. One of my favorite stocks is UiPath. That had a massive move yesterday, actually, after the earnings. This is the stock I'm actually about to buy. It's called Fastly. I mean, actually, it's coming into my buy area right about 10 here, 1040, maybe around 10. I'm in. Now you're going to say, well, why are you doing that? It's down. I'm like, well, you buy on pullbacks, right? Although volume is a little high today, just be carefully. And if you look at 3-year Fastly, right, it used to be a $30 number. It got all the way down to fives. You wait, it based, it's moving on. Okay, earnings were good. They pumped it. Let's see what happens. This is the 10-year Fastly. The stock used to be a $135 number. I love these types of bases. When they starts coming off these types of bases, they may, not all of them will, but some of them will turn into Carvana. You guys see Carvana? $3.55 stock, base, starts going, and look where we are. In fact, I was long Carvana right about 16, 17 range. I got out at like I think it was 90-ish when I got out. I took my 5X in like a year and 5 months, and then it went to 400, right? So all I'm saying is expand your horizons. Don't just be stuck in the same goddamn names. And then there's tons of stocks in here. I'm telling you, there's 78 stocks in here. And that's what I'm going to pivot to in the New Year's. A little less stress. In fact, Carvana is making a 52-week high pretty close, actually. Teradyne is in there. There's all kinds of stocks in there. There it is. Look at that. It's in an uptrend. It's been in an uptrend. It's probably been hitting 52-week high list probably for the last 2 months. And pullbacks on these are more viable than anything else because we're in an uptrend. So you'll be more comfortable buying pullbacks as opposed to guessing stuff. Estee Lauder is in there. Elf Beauty, same thing. Estee Lauder, Elf Beauty, right? Look at Elf Beauty. Dead, right? Same group. Here's Estee Lauder. Look at the difference. 52-week high. Ulta Beauty, same kind of business, right? Well, new 52-week high. So why is Ulta Beauty and Estee Lauder making new highs while Elf Beauty is making lower lows? Even within the same group, you can figure all this out. That's why I like the 52-week high list. Again, talked about Walmart is on the list today, making a 52-week high, and here's Target. Look at where that's at. Now, is it time to buy Target? Maybe it is. Here's UPS that I just bought. Okay, versus FedEx. Same company, same thing. They do the same business. Look at the difference, right? So you need to be more of a stock picker, I think, in 2026, and this kind of stuff will guide you to be in the right stocks, right groups of stocks. And so that's it. That's the pivot. That's what I'm going to do. Again, don't follow me. What I do is risky, but I think that's what we need to do. You know, have a hybrid view of the market. Love it. Cool. Thank you, sir. Yeah, man. Make your life easier. Good questions. Let me answer this one. This is a good question. How do I identify constructive pullback from just averaging down on a falling stock? Well, let's go to the charts. Let's talk about it. Let's do that. My rule of thumb is this. You guys can see the chart, right? Oh, no, not my face. Okay. I'm going to go back to the 52-week high list, right? Here's the deal. How do I know if I'm buying a falling knife or if it's a constructive pullback on uptrend? Price and volume, number one. Number two, my chart, as you guys can see, has no lines. I like naked charts. I don't look at candles. I look at bar charts. Pretty simple. 20 EMA, 50 EMA, 200 EMA, Bollinger Band, MACD on the bottom, volume color-coded, second window. That's it. That's number one. Number two, let's look at a couple of things here. Okay. Uptrending stocks. Let's go back to the 52-week high list. Let's look at analog devices, let's say. Okay, ADI, that was in there. That stock has been base, finally broke out about 260. Now it's about 285. But let's look at one that's been in an uptrend for a while, and then I'll be able, pictures worth 1,000 words, I'll be able to explain myself a little bit better. I don't know if Apache is there. Okay, that's consolidated and then broke out. But let's look one that's like more in an aggressive uptrend. Okay, I don't want to look at biotech. Oh, that just completely broke out. Went nuts. Okay, let's look at Bristol Myers is in there, Citigroup is in there, Caterpillar is in there. Okay, let's look at Caterpillar. Okay, big company, obviously, right? So actually, that stock made a 52-week high right about 400 range, and then it consolidated and went up. Okay, so where did that stock stop on the pullback versus I'll show you guys a disaster or two, and then you guys will see the difference. When you have moving averages on, moving averages are a good indicator of trend, uptrend, downtrend. So if the 20 EMA is above the 50, these are very simple things, folks. There's a 20 EMA above 50, 50 above 200, and so yellow is 20 EMA, light blue is 50 EMA, 200 is 200 EMA. Okay, it's got to be above those. Well, once it's above those, any decent pullback to the 50 EMA, if it's an uptrend, should be a buyable one. And when the uptrend gets really more aggressive, gets to about a 45-degree, 20 EMA should be a good one to buy. It should hold. Stocks don't just break and then die. Okay, so if you look at, you know, all these mid-tier, low-end consumer stocks, right? Like, for example, this uptrend right here that we're talking here, right? Stock going from 61 to 116. Remember what I said? Once it's in an uptrend, once it's above all the moving averages, now we're in a trend. We have an established trend. I don't have to catch the bottom. I don't have to catch the top. I'm just looking for this meat right here. Right here. Okay? So, to me, that's that versus everybody's, you know, gung-ho on, I don't know, hymns. I mean, right? Okay. Well, I don't know where this thing is going to stop now. It's in a downtrend now. And you may think you know something. You know, you don't know. You don't know anything because this stock is in a downtrend. And it's wild, goes up and down $20, $30 for no rhyme or reason whatsoever. I don't want to deal with this kind of thing, the heart attacks. And on this one, literally moving averages don't hold, trends don't hold. So that's why I'm looking to buy Fastly. Okay, so there's a healthy pullback. We're pulling back to the 50 EMA. It's above all moving averages except that. We're just kind of consolidation phase here before a breakout. And the entry point is less risky, by the way, right? So I just like following a trend. And if I can, and if moving averages are going to help me, they will. But catching a falling knife, like, okay, I put on the Neo trade the other day, right? That's a bounce back trade. Will it work? Hopefully it will. I bought 150 calls, January 5s, when the stock was 470, when it's into this band of support right here. But stock has been coming down forever, right? For at least a month now. So from 7.5 down to 470. I go, okay, we'll step up, we'll scale in a little bit, and then we'll have a bounce back play. You can still do these too, but would you rather be guessing where Neo is going to stop going down versus, okay, I'll comfortably buy a pullback? In fact, Neo had a massive uptrend before. It went from 3.5 to 8. While it was going up, okay, all the pullbacks to 20 EMA were holding because it didn't even test the 50 EMA. That means it's really, really strong. There's really aggressive money flow into the stock. So if the stock is a really, really strong uptrend, first pullback to 20 EMA on low volume, just like here, are your indicators that, okay, I can step up and set my stop 6-8% below it, and then hopefully the uptrend continues. Because if you're questioning that, what if I buy a 52-week high list stock and that's the top tick I'm going to pay? You got to be the unluckiest person on the planet to keep doing that over and over and over, literally. Okay, so I just follow simple things, man. I don't have to make this a rocket science. Now, structuring a trade around it, that's a different story. What I do with it. Do I do synthetics? Do I sell put credit spreads? Do I sell puts? All kinds of things. That's different story. How do you structure a trade? But give me an uptrend, I can work with it. But I don't want to guess like, okay, is it going to stop here? Is it going to stop there? So hopefully I answered your question. There you go. There's another. Yes, Walmart is on my list. Yep, it's on the 52-week high list today. It's making a new 52-week high list. Thoughts on NBIS? Another fan favorite. Same as IREN, same as Oklo. Let's take a look. I don't know. I know the company. I mean, AI power generator, right? Okay, let's take a look. Okay. NBIS. There's your answer for the other question as well. Stock is in an uptrend, above all moving averages. We have a clear uptrend established, and every pullback to 20 EMA is holding. It's not even one time it came maybe down to the 50 EMA, and then now we topped. Now we're in a downtrend. No ifs, no buts about it. Lower lows, lower highs. Stock topped at 140, got a haircut to 80. That's about 40%, while the market's 1% from ATH. What's going to happen to NBIS if we get the carry trade bullshit happening and market sells off 20%? What do you think NBIS is going to do? You think NBIS is going to counter trend rally to what the market is doing? No, it's going to die. Okay. I mean, these things are overpriced as it is, right? Or IREN is a similar one. And here's that one, right? And when it was in its uptrend, wonderful. We ended that now. Now, could it go make a new high in another 6 months? Potentially. But I don't want to guess it. I don't want to be in there. Again, what if market sells off 10% here? Where's IREN is going to go? Remind you guys, this was like a $5 stock, went to 75. Okay, same thing, Oklo. There you go. Stock was 195, got a haircut of more than 50%, down to 78. While the market's 1% from all-time highs. Everybody in the boat. Like when it's going up, it's good. But I just look at charts. Fundamentally, all these companies are expensive. It's just like the quantum computing stocks were. As your Rigetti, which I was short, actually. There's my labels. I should have stayed short. Yeah, anyway, long story short. But, stock tops at 58, gets a haircut to 20, down 60%, while the market's 1% from all-time high. You're holding the bag on this one. You're going to hold the bag for a while. Now, could it go back in a year, 6 months, whatever, make a new high? Potentially. But then I'll just wait until it bases and then rolls up, because I'm dealing with 10,000 other stocks. I don't have to deal with the usual suspect. That's all my point. So expand your horizons a little bit. You don't need to be in the same damn stock some influencer or some Discord jockey is in. I don't want to do that. I don't want to follow. I don't like following the herd. I do my thing. So hopefully you guys enjoyed it. If you so schedule next week: Monday trading with Sergio, Wednesday trading with Sergio, Thursday members only live, Friday power hour. I put the link up. Nobody showed up. Again, you guys let me do this by myself. But rotation is a powerful thing. Understand it and take advantage of it. Make your life a little bit easier. I don't day trade. I like investing long term. In fact, that's how tough of a year this is for me. My investment account is beating my trading account this year. Go figure. Last year it was not like that. The year before it wasn't like that. This year, for some reason, was a tough year. Still up handsomely, up 2.5x of the index. But I'm not playing the game for that, because if I take the taxes out, if I take slippage and commissions out, you're just basically just doing nothing. You need to beat the indexes 2-3x just to almost break even, if you're trading actively. If you're not, don't do it. Again, I said that a million times. I'm saying it again. If somebody disagrees with that, come online, grab the link, and we'll discuss it. But yeah, my investment, because of you doubled, Google doubled, plus the other ones are basically even, and then it's beating my trading account this year. That's it. So what does that say? Buy and hold is better than trading, being a jockey? Maybe. You know, I'm full transparency. I'm saying this as a trader. I mean, it's been a tough year. Again, not tough that I'm losing money. It's a tough year, just that I can't double my account this year. Last year I did 120%. This year, nowhere near. I was there almost 80% 2 months ago, and then got stuck with the same goddamn names. Loaded up on these DATs and short puts and short put credit spreads, long call, all the stuff, and bye-bye. See you later. You know. But still up. I'm happy about it. I'm not disappointed. I'm actually disappointed. But I was short a couple things. They died. Didn't hold long enough. You know, I'll do an update for the end of the year, like I do every year, a summary of what kind of grade I'm giving myself. And but you know, life goes on. I don't have to prove anything. I don't have to do anything. Just have fun trading and then invest. That's all there is to it, especially if the pumps are going to start again. So much love. Have a great weekend. I'll see you guys on Monday, 10 a.m. Pacific, 1 p.m. Eastern, trading with Sergio. So with that said, Vamos Barca, always number one.